going to get started. I think today is really just a bit of an introduction over the platform and to go over some of the changes that you may have noticed over the past few months. There's quite a lot of improvements on the web platform, and it's an ongoing process. So we're always bringing out new features and trying to change things to make the platform more usable and a little bit easier for the traders to apply to their trading. I want to just quickly start with a quick poll to see how long have you guys been trading. If you don't mind just quickly answering for me this question. Okay, thanks. It looks like mostly less than 2 years, a couple of experienced guys. I'm just waiting for my screen to refresh. Yeah, okay, there we go. Okay, so if you have started using Autochartist before the beginning of this year, sort of late last year, or middle last year is when we launched for Vantage. I'm not sure exactly when we did the launch, but at the time, Autochartist had a slightly different view. We had the tabs across that represented chart patterns, Fibonacci patterns, and key levels, and we had two separate grids that showed completed patterns on the one side and emerging patterns on the other side. Now what we've done was we've consolidated that view into a single screen, and that is this tab here that you see now, trading opportunities, and I'm going to spend most of the discussion on this tab. The real important change that we've made was to have only one grid at the bottom, but we've included this results filter, which I'm quickly going to highlight here. This results filter is a real-time filter that allows you to choose what types of patterns you want to look at. Just for those of you who are completely new to Autochartist, the way the layout works is we've got our pattern display area in the middle where you see the graph with some more characteristics of the pattern displayed here on the right, and you choose a pattern by clicking in the grid down below. Now, instead of having only a single grid for completed chart patterns, for example, we've thrown everything in together. We've thrown the emerging and completed patterns together, and we've also mixed up chart patterns, Fibonacci, and key level. So literally all the types of analysis that we offer you see on a single screen. Now, for many of you, this may be a little bit of an information overload, or in some markets, especially like Forex, where we get a whole lot of patterns coming through per day, long-term patterns, shorter patterns. It can often be a little bit of information overload. It's like drinking from a fire hose. So for that reason, we include this results filter. Now here you can choose. If you only want to look at completed chart patterns, you can simply uncheck everything else, and this grid updates in real time, and it will only show you those patterns that you requested. So here we've got a much shorter list of active opportunities on complete patterns. Let me also say something about the tab that you see here, active trading opportunities. This is another very, very important feature that we brought in, and that is to basically only show patterns that are still tradable, that are still fresh, that are actually still active trading opportunities. So as soon as a pattern reaches its target, or in the case of an emerging pattern reaches the support or resistance level that it's aimed at, then this pattern becomes an expired opportunity, and it moves to this tab over here. So let's have a look. See some of these opportunities, a few of them in the list. so two reasons why a pattern can expire is, like I said, if the target is reached, like in this case, we have a triangle target level at 78.934, and the price very nicely went through that level. So there's really no point in trading in it anymore. That's why we've removed it from the active opportunities. The opportunity has come and gone. These may be just repetitions of the same, let's just see. And of course, the other reason why you may see a pattern expiring is sometimes things don't always go the way we expected. Okay, here we have that case where we had an expectation for the price to go to this level here. The breakout was reasonably good, except we had a very sharp pullback shortly after that, and subsequently the price has just moved completely the other way, and it looks like there's a completely new channel forming over here, which means that things didn't turn out the way we expected them to. This will obviously also expire at trading opportunity. Let's see a couple more. Now, while I'm continuing, I just want to invite you, if there's any questions that you have, feel free to ask. I'm going to keep my eye on the questions and answers screen every now and again. And if you give me comments, I'll just delete those. Thank you after I've read them. Okay, here we have another situation. So this is quite an interesting pattern where we had a very good, very strong breakout. We had a pullback, but the pattern didn't expire. We kept this opportunity as active until the pattern actually went in the expected direction again and reached the target level. There's a specific algorithm that we're using, and there's an imaginary line that is drawn. It looks something like this. If the price crosses this level, if the price crosses through there, then we're going to expire the pattern. But as you can see, as time goes by, the expectation becomes stricter and stricter for the price to move in the direction of the target level. So in this case, even though there was a pullback, we have some measure of leniency to say, look, there's still a chance that this was just a temporary pullback and that it will still reach its target level. Okay. Excuse me, I seem to have a frog in my throat this morning. Okay, so now I just quickly want to go over a brief discussion on the difference between completed and emerging patterns. So I've just selected chart patterns here in my results filter, and I've chosen both emerging and complete patterns. So one obvious difference between the two, if you just want to have a way of quickly distinguishing between them in a grid, is you can see that completed patterns have colored arrows. So the green up and the red down arrows are colored in. Then you know it's a completed pattern. And obviously in the type column it will also tell you the pattern is completed. Or if the pattern is emerging, you will see the arrows as being grayed out, and the type column would read emerging. So a completed pattern would always have a breakout, and there would be an expectation for price to go to a particular range or a particular level, both in bullish and bearish directions. Let's just look at a bearish pattern here. So you always see this colored in level beyond the support and resistance level, and this gray target area. So this is an area where we're expecting the price to move towards. For emerging patterns, you won't see such a gray area. And you'll also notice here in the characteristics on the right-hand side that the breakout column is not applicable. There's no breakout and there's no forecast price. Now, there is this arrow that shows we're expecting the price to move back down to the support level. In this case, the time at which the pattern was identified is indicated by this dotted gray line, so that you know when it was that the opportunity was identified. And then subsequent price data is updated as new data becomes available. But you see, we just draw these empty bars, red and green bars. We don't color them in, so you can see this is the price action that took place after the time when the pattern was identified. So this pattern actually did come very close to this level of support, and it was traced again, so it's still trading very much inside this range. Emerging patterns are, well, the reason why we sort of invented them, or decided to add them to this application, was that you can identify a pattern based on its touching points. So that creates the shape. So the touching point determines the angles of the support and resistance lines. The only thing that an emerging pattern doesn't have is a price breakout. As soon as the price breaks out, then the pattern becomes, accepted according to the theory of chart patterns. Then you consider it a completed pattern. So we've added emerging patterns to be like a forward-looking tool to give traders an early heads up. Listen, here's something that's going to develop. Get ready for a trade, or get into the trade early even. But what we've also learned subsequently is that it's a very valuable tool for swing traders, traders that actually look not just for breakout, but they're looking for a range. They're looking for situations where price is range bound. And so the swing trader's expectation is that price will go down to a support level and then bounce off it again and reach to, go up to a resistance again, and for this to continue until it actually breaks out of the range. That's why we have drawn these yellow dotted lines, which is a visualization of how the support and resistance are extended beyond the time when the pattern was identified. So in particular, we make a distinction between trending and non-trending patterns, where the trending patterns are those that have really a nicely defined range, like this one, where you have the price sort of staying inside a range on a downward trend or an upward trend. Channels, rectangles, you get some nice wide wedges, and rising and falling wedges that can also be really nice trending pattern opportunities. So this is typically what the swing trader is looking for. Non-trending patterns are more like the triangles, where you have price being squashed into a corner and it has to break out somewhere. So you can't really expect it to stay inside the range for very long. This is a descending triangle, but with a very, very shallow slope on the resistance line. So this could have been a pretty nice swing trading opportunity as well if the price bounced off this resistance line. But even so, if you were a swing trader or a swing trader, if you entered the trade up here, you followed the trade all the way down to the support line, you would have made a nice few pips in your pocket. Let me just see if I can find another example of a image. No, most of them are actually channels. Okay. Right, so what I want to quickly cover next is to show you how to set up a search. Obviously, since we've consolidated all the different pattern types, chart patterns, Fibonacci patterns, key levels, that has changed the search functionality only very slightly. So the first thing you choose is a group. We've got a few different groups. You can choose between CFDs, Forex, and Forex majors on different time scales. So for this example, let me just choose FX majors all intraday. And as soon as you choose the group, you'll see that the name of the search is updated. And I can also change the name to something specific and create my search. This is really quite simple if you're doing it on a group level. You see when you log in for the first time, there's already a few, some of the major groups that you might want is already predefined, some of the major searches. So I'm just going to go and edit the search that I've just created and show you how you can select only certain symbols. So if I'm interested only in Euro, USD, I can type in the symbol over here. You can see auto-completes in this field over here. Click the add button and you'll see it appear underneath. So I've got Euro USD intraday. I'm also going to add Euro USD end of day. The daily symbols, add those. Intraday is simply a collection of everything, 15, 30, 60 minute, 4 hour, those 4 different time frame layers. It's all intraday symbol. And let's see if we've got, no, we don't have, we have here, I'll add USD, sorry, for USD. Daily, okay, so here I've got a custom list of symbols that I'm interested in. Once again, every time I enter a new symbol name and I add it, you'll see the search name changing to the name of the last symbol that I've added. So I'm just going to change the name again to my list and save the search. Now you can see the name is updated, the name of my search is updated to my list. It's here in my list. And I'm just waiting for the package to come through. Just a couple of notes. When you log in for the first time, you'll find that the expired trading opportunities tab is going to be empty. So this only gets added on the client side, which is jargon speak for it happens on your web browser. So when everybody logs in for the first time, we'll have a list of active trading opportunities, but 0 expired trading opportunities. And then when your as time goes by, as the active opportunities that you've seen are expiring, so they'll start moving and populate that tab for you on your computer. So every different user will have a different view of expired trading opportunities. Okay, here's a nice example of an emerging triangle, but the price at the time when the pattern was identified is so close to the support line already that it's hardly a real trading opportunity. But yet it hasn't, the closing price hasn't reached that target yet. But here you can see this is a great example of a non-trending emerging opportunity, so not ideal for a swing trader to follow. Okay, I quickly want to. I see a question. Aslam Cheval asked, "How do I add Forex?" I hope I did answer that question in this little new search. Okay. I want to quickly just look at Fibonacci patterns, just to give you a quick overview of those. There are 5 different pattern types. If you want to see what kind of pattern to be searching for, you just open a search, go to advanced search. You'll see there are 3 different tabs, one for chart patterns, Fibonacci patterns, and key levels. Right at the bottom, is a listing of all the different patterns, and you can actually choose which ones you want to insert or include in your search. So for the Fibonacci patterns, I'm just going to that tab quickly. There we have, you can see we've got 3-point retracements and extensions. We search for ABCD patterns, so a 4-point pattern, and we've got Gartley, butterfly, and 3 drives. Those last 3 being 5-point patterns. So quite straightforward. The theory of Fibonacci says we see this ratio between this price ratio between turning points that match certain fib ratios, and then we expect price to find support or resistance again at one of these levels, depending on which side, on which direction the pattern is facing. So ABCD patterns are really nothing more than a couple of retracements and extensions added together. Now, what I actually want to show you is what emerging Fibonacci patterns look like. And you always see them, you can recognize them by this pink dot. Over here, there's always a pink dot. And obviously, of course, the directional arrows are not colored in as the chart patterns, and you can also see in this column that they're emerging patterns. So an emerging fib pattern is really quite a convoluted thing, because what needs to happen for the pattern to complete is, let's take this case for example. In this case, the price will have to come down to this level, to very close to 1.241, and when it reaches that level, it will have to find support and retrace. So you need to have you actually need to have a turning point appearing at this level where you see the pink dot. It doesn't have to be at the same time as the pink dot, it just has to be at the same price level. Then you've got a completed Fibonacci pattern. So you'll have a lot more cases where Fibonacci patterns actually never complete. Let's have a look at a emerging Gartley, something a little bit more interesting. Also very, yeah, like I say, quite a convoluted thing needs to happen. It's a lot more of an intricate pattern. You've got an ABCD with an X extension before it. So yeah, it's really for guys who really know the Fibonacci very well, and to know what they're looking for. And typically, you'll only use the emerging patterns on longer term, on more, perhaps with more points, Gartley, butterfly, or 3 drive patterns. Then key levels. Key levels is another type of analysis that we've included. I'm going to go back to my Forex, a few more symbols in my Forex search. Key levels is nothing more or less than simply a horizontal level of support or resistance. So these levels are identified with a certain number of touching points, and that is directly related to the quality of the pattern. So you see the number of bars in the quality. That means this is basically how many points were touched on that support resistance level. Let's look at this one. This is a 5-point resistance level. Now, horizontal support and resistance is very useful because there are 2 types of trading opportunities. Not only are they trading opportunities in themselves, but they also provide kind of a glue with which you can combine other types of trading opportunities. For example, if I find, let's say, a head and shoulders pattern where the neckline is also part of a longer resistance line, that is like a confirmation signal. And this is something that we're currently working on to bring those kind of confirmations to you in a comprehensible way. I've got a question coming through. The time identified. What time is? Okay, so my time zone at the moment, you can see up here, I'm on Africa time, Johannesburg time. This is where I'm located. If you want to switch to your own time zone, simply click on the drop down and choose your time zone. Let's see if I can choose Australia, Sydney. So when you change your time zone, everything updates, and then you've got your, all the identified times and everything updated to your time zone. So in this case, this pattern that we're looking at now, this resistance line was identified at 6 o'clock, and it was identified on a 60-minute interval. What a lot of people get confused by is the different time scales and the time over which different patterns are formed. Always look at the length column. So the length column down here gives you just a number of candles over which the pattern was formed. So this pattern that we've highlighted formed over 163 candles, and each candle is 60 minutes long. So the 60 minutes, it's really 60 times 163 minutes, so 163 hours. What if we divide it by 20? So roughly about 5, 6, 7. So it's about a week. So it's formed over roughly about a week. Obviously, for forex weekends are not taken into account, and with equities, you also only have trading hours. So 160 hours for a stock symbol would typically be span over a much longer time. So that would really be more like 20 days, because there's only 8 trading hours in a day. So the two type of opportunities that we have with key levels are approaches or breakouts. Now, an approach is something like this, which is very much like an emerging pattern where we see price going towards a level of support or resistance. So the level was formed. You can see there's some touching points here, some touching points there, and then the price moved away from the level, and now it is yet again approaching that level. This is the side that if you click on the graph, you can zoom into it to get a clearer view. And now we've got price approaching that level again. So our target is the actual resistance level itself. Then we've got a breakout, which is a situation where price has approached that level. It's also a resistance level, and it's actually broken through it. And now we've got a target expectation. We're expecting the price to go through to some target level after the breakout, depending on the strength and the momentum of the breakout. So those two kind of different key level opportunities. I want to quickly show you this next tab, which is the performance statistics. This is really where we see what the kind of overall success rate is of chart patterns and key levels. In this case, I've clicked on the key level statistics. This is for what did I click on now? Key level breakouts. So we've got 3 different types of performance statistics. We're looking at chart patterns, which include only completed chart patterns. Then we've got key level breakouts and key level approaches. This is really just like a scorecard where we say, how well has it performed. And this is specifically for forex. You can see here the exchange is forex. The period ranges from October last year, end of October last year, so it's about a 6-month period, a little bit more than 6 months. There was over 20,000 patterns evaluated, and of that we had 12,000 correct. So that gives us an overall score of about 60% for key level breakouts for forex in this case. And then we've got a few breakdowns where you can see what types of patterns were more successful, what type of intervals were more successful. Of course, there's only support measures for 3 types of patterns. And you can also see different success levels for different for particular symbol. So it's not how can I say, it's not something you can write a book on, but at least it gives you a bit of a better breakdown, so you can see you can fine-tune your trading. Let's look at CFDs, and we're going to see some chart patterns. It's a bit more interesting if you see how well different actual chart patterns perform. Some of them have much better success ratios than others, and you can obviously use that information when you see a chart pattern to make up your mind whether you want to follow a trade or not. So, much higher percentage, but a much smaller quantity of symbols that were evaluated over that time. Only 200 patterns, but 69% are correct. And we've also included the total number and the correct number of patterns. So, I mean, a statistic like 0 out of 1, which is 0%, doesn't tell you much, and neither does 1 out of 1 or 2 out of 3. But 9 out of 9 is becoming a little bit more interesting. But definitely 15 out of 16 is better, and 70 out of 110 is it's already quite a credible statistic. So you can go through these stats in your own time and just see what the scores are like. This final tab is just a section that we've added with some resources for education, and we've got a daily market watch video that is usually sometimes on Forex, sometimes on American stocks. We kind of try to mix it around. It's usually our analyst James Hyatchek in the States that does this daily market watch video. It's on YouTube, so free to watch that. When you get started, there's a quick tour which basically covers most of everything that I've said now. There's some more videos about setting up searches, looking at chart patterns, split patches, key levels individually, and also how you can use it on your MP4 platform. I do believe you guys have an MP4 platform, and you can download a plugin where Autochartist actually overlays the chart patterns onto that platform for you. So yeah, you can look at all of this stuff in your own time. Let me just see what we've got. Is there another question? Yeah, no, I think we've covered all the questions. If you've got any more questions, you're welcome to ask now. I think I've pretty much covered everything I wanted. If there's anything else that you would like me to cover. Oh, let me just quickly give you an overview of the chart pattern quality indicators. Dean asks whether we're going to do an MT5 plugin. We are kind of waiting to see how the market accepts MT5. It's been a very slow start, but I definitely think we will provide it at some point in the future. I just can't tell you whether it'll be in the next couple of months or maybe just a little bit later, closer towards the end of the year. Dean, so sorry, I can't give you a straight answer, but I think we certainly will provide it at some point. So, just a quick look at the quality indicators. Once again, to explain it better, I'm going to just to show you what I'm talking about. It's this block over here with the little colored dots. We've got a number of different indicators for chart patterns, and most of these indicators are visual indicators. It says something about the visual quality of the pattern. So I'm going here into the advanced search section again for chart patterns. Here you're able to set different levels of the quality indicators when you create a search. Now I must caution you that if you set these levels too high, you're going to end up with no patterns in your search results because the filters would simply be too restrictive. But there are these very useful little graphs that help me to explain to you what the quality indicators actually mean. So the first one is clarity. As you can see, a pattern with lots of noise in it is really not a very clear pattern. So we're looking at noise in the price graph. if the lines are very clear and smooth between turning points, then you have a much better clarity rating. Yeah, it's really an indication of the type of price volatility, price action. Then the initial trend says how big was the trend that preceded the pattern. And for certain types of patterns, particularly like channels and triangles, flags and pennants, those kind of patterns, you want to have a significant initial trend, because that also has a bearing on the expected target level. The theory also uses that quite a bit, where it says if you have a strong initial trend, you're going to have a strong breakout. Then we've got volume. This is the only indicator that does not have a visual aspect to it. We're just looking at whether the volume increased towards the latter half of the pattern. So as the pattern is completed, the trading volume increase. It's a useful signal for stock traders. It doesn't really apply to Forex because we don't have a volume indicator for the Forex market as a whole. Uniformity is an indication of how evenly spaced the turning points are. Some patterns, they have all of the turning points, and they are kind of by chance they are completed or well-formed patterns, but they don't really look very well-formed because all of the, let's say, the last 3 turning points are scrunched together, or the first 2 turning points. So this gives a measure of how visually pleasing the spacing of the turning points is. Is it a nicely formed pattern that looks even and well proportioned? And of course, then finally, the breakout strength. That's the distance with which the candle that broke through the support and resistance level, how far the closing price is beyond that level. So if it was a nice long candle like this one, for example, you see this red candle that broke through the support level was very quite a long candle, and the closing is far beyond the support line. So that's why this particular pattern scored a very nice breakout. But the clarity score is pretty low because there's a lot of choppiness, and the uniformity is also not very great because we don't really see nice spacing between the turning points. You've got one turning point here, one there, and then right at the end, just before breakout, you've got 2 turning points in quick succession, which is not really all that great. So the purpose of these quality indicators are to make to give especially beginner traders an indication of, is this a well-formed pattern? Is this what it should look like? And it's really what we're trying to show or to say is the quality is all about the looks. If the pattern looks pretty, then it's most likely a well-formed pattern, and you can trust it a little bit more. Let me see. Once you do the MT4 plugin and set the searches and the alert button, it will give a pop-up to alert a possible trade. Okay. Yes, the MT4 works slightly differently, because what you do is you drag the indicator onto your MT4 graph, and then as patterns are identified, they actually get drawn onto the graph itself. So there aren't really pop-ups in MT4, but you see the patterns appearing as they are identified. Dean, I'm not sure I understand your question. Are the default values all 0? And is 0 the recommendation? You mean the quality indicators? No. 0 quality indicators are all a value from 0 to 10. Oh, okay, I think I understand what you're asking now. So when you're creating a search, in the advanced search, by default, yes, all of the quality indicators will be set to 0. This means we're allowing through all patterns with any quality, even if the quality is 0. So if I'm going to change this value to 8 and another value to 6, for example, this is already very, very restrictive, because a lot of patterns don't have high values on more than 1 or 2 of the quality indicators. So yes, the default values are 0, and it is highly recommended to keep them that way unless you're creating a highly specialized search and you know exactly what you're looking for. Unless you are sure about that, rather leave them on the default values. Another question, if I have 3 different brokers, can I download the MP4 plugin to all platforms or only one? We've got different plugins for different brokers. You can actually load the broker A's plugin onto broker B's platform because they're all MP4 based. The difference is that you will have a slight discrepancy, so that in prices, the prices of the brokers aren't all the same because they're over-the-counter products. So you'll find that the patterns don't touch the candles, perfectly. But you can, for each broker that you've got an MP4 plugin for, you can download the specific plugin for that broker by all means. They should all, each plugin can be in each different broker's installation without any problem. We also have our own plugin which works on our direct platform, which you can also use. Okay, I think we've covered just about everything. It's quite a broad lot of topics that we've covered in this tutorial. If you have more questions, please feel free to email us on support@autochartist.com. Our guys there are usually able to answer you within 24 hours. Obviously it takes a bit longer over weekends and so, but you should get your queries. If you have any problems, please let us know. If there's anything else that we can do for you, if there's any specific features you'd like to see, let us know. We always like hearing from our customers. So I hope you guys have a lot of success in your trading, and yeah, like I say, we'll soon speak again, and let us know if we can help you with anything. Thanks very much, and all the best.